We've seen the rise of South African investors moving into Central Eastern Europe. I think in the last 2 to 3 years, and slightly longer in Romania, they've invested about 6 billion euros of capital in CEE, and it's mostly in Romania, Poland, a little bit in Czech Republic, and a little bit in Hungary and Slovakia. And then we've seen fund managers handling money for Singaporean investors. We've seen the Malaysian Teachers Provident Fund buying in Warsaw, and in Czech Republic we've seen the rise of the Chinese buying individual buildings, buying companies, buying football clubs, and now recently buying a core CBD product where they're in due diligence. So we're definitely seeing more money coming from other sources or other countries. And that's interesting from an investment point of view, because you're not relying on only traditional German funds to buy your building. Excuse me. And that helps the liquidity story. So a lot of investors or people, fund managers, that look at Central Eastern Europe and look at countries like Romania, Hungary, are always a little bit scared about the exit because they're not quite sure how they're going to price it, not quite sure of the liquidity. But I think what we've seen is a rise of liquidity, which helps sell the story as to why you might want to invest there. And given also that you have 300 bps different diversification or differential between core Western European markets and some of these markets, makes an attractive place where funding rates are below 2.5%, sometimes below 2%.